Disclosure: the video content and discussions presented by OM Bullion LLC is strictly for information and educational purposes only. Discussions surrounding gold, silver, mining, or other precious metals, including bullion coins, bars, or collectibles, are based on personal experience and opinions provided publicly through available financial data and investment news. OM Bullion LLC is not a financial advisor, and nothing in this video constitutes as financial investment nor construed as legal or tax advice. Always conduct your own due diligence and research by consulting with a qualified financial and tax professional before making any financial decisions. Your money, your responsibility. OM Bullion LLC is a qualified precious metals dealer, and we express professional opinions before making any decisions related to buying, selling, or storing precious metals. Market conditions, premiums, and risks can vary widely, and past performance is not indicative of future results. Your assets, your money, and your responsibility. Hey, what's going on, my metal stackers? Exciting news for both gold and silver, especially silver. It is just breaking that $40 barrier, and we are not done yet, especially for gold. Gold, obviously, you guys know it's been making some all-time highs, and we are just getting started with this secular bull market. So what's driving gold and silver to all-time highs? Well, it's pretty obvious, and there are many key factors involved. We have inflation. We have a weaker dollar. We have tariffs that continue to be the subject matter. An unreliable jobs market. I mean, this is just a joke. I've never seen so many revisions in my whole entire life. And in fact, I think the unemployment number is a lot higher than what they're suggesting. Global demand for gold, right? So we have a lot of central banks. They continue to add gold to their balance sheet. So they know something that we don't, right? What else? Oh, market uncertainties. Let's face it. Both the Dow and the NASDAQ continue to make all-time highs. Yes, but for how long? I honestly believe we are going to face a huge correction in the short distance. Don't know when, but it will happen. It is just, that bubble is about to burst. It's about to pop. What else? Oh, the ongoing global conflict. Well, let's face it. We're not going to see any peace agreement between Russia and Ukraine or Israel and Hamas and other Middle Eastern countries anytime soon. So those are some of the key factors that I think that are driving both gold and silver to all-time highs. But I think we're in a bigger picture. I believe we are in a secular bull market when it comes to gold and silver rather than cyclical. Secular bull markets are long-term trends characterized by sustained price increases over several years or even decades. Keep that word in mind, guys, decades. While cyclical bull markets are shorter-term fluctuations, typically lasting from several months to a few years. And this is where I believe we are in a secular gold and silver bull market, and it is just getting started. And this is not just coming from me. This is coming from well-known economists out there, and a lot of gold bug economists that believe that we are in a huge secular bull market that could last anywhere from 10 to even 20 years, guys. This is just mind-blowing. Just imagine imagine the returns that one can accumulate over that long period of time. And this is where I think we should have a little bit of everything if that's the case, if we're in a secular bull market. Now, at the beginning of the video, I did mention or I should say, I posted a disclosure statement, okay? So, guys, please keep in mind, I am not a financial advisor. I am not a broker. I am not advising any investment options here, right? I'm not advising any stocks or ETFs. Again, keep in mind, I am a precious metals bullion dealer. But I do want to talk about, since we're on the subject matter of gold and silver, gold is up over 40% year to date. Okay, so I'm just going to stick to that term, year to date. Silver is up 44%. Okay, now there are some mining stocks and gold stocks and silver stocks that I like out there. Again, this is me personally. I like them. You guys do your own research, your own due diligence. And again, I am not advising anything or on any of these stocks that I'm about to mention. So when we talk about the mining stocks, there are two well-known mining stocks out there. You have the GDX and the GDXJ. And do your own research on the difference between the two. But the GDX is up year-to-date 92%. The GDXJ is up 108% year-to-date. This is just an astronomical number. There's another favorite of mine. I like the GLD and SLV ETFs, right? So obviously there is no physical holding on these stocks, meaning, you don't actually hold metals if you invest in these stocks. But these stocks, they do tend to follow the price of gold and silver. But GLD, okay, is up year to date nearly 35%. And the SLV, which obviously follows the price of silver, is up nearly 37%. So guys, those percentages that I just mentioned, just imagine if we are in a secular bull market, just imagine the returns one can actually accumulate if we invested in these stocks. And again, I'm not advising you invest in these stocks. I am just personally telling you what I like. Now, just because these percentages look appealing, guys, please keep in mind, past performance is not always a guarantee of future results. So things can change in the future. Keep that in mind. And I cannot stress enough, I am not recommending any stocks or ETFs. I just like to talk about what I like. And what I like is to have a little bit of everything, okay? And everything involves having the Goldbacks as well. And let's talk about those Goldbacks, because a lot of my viewers, they tend to criticize and bash the Goldbacks, the premiums, and I mean, the list goes on. I don't want to get into a lengthy video about the negative feedback on the Goldbacks, but let's just talk about this for a second. Back in 2019, when the Goldbacks were first released at the exchange rate at $2.25, okay? If you invested $10,000 back in 2019 at that exchange rate, okay, that would give you about 4,444 Goldbacks, right? If you held on to those Goldbacks today, today's Goldback exchange rate is at $7.32. How much would that be worth today? Over $32,500. That is your purchasing power. Talk about preservation of wealth. Guys, think about that. The same $10,000, if you invested in a bank or a savings account, CD account, and let's just, I don't know, let's just be modest here. At 5%, in a CD, that would give you nowhere close to $32,500. You crunch up the numbers, and I guarantee you it would not even come close to that $32,000, $32,500. Okay? You know what? Let's talk about that $10,000 if you invested in a CD or money market account at 5% back in 2019. Fast forward to today, that would give you about $3,000, give or take, right? So a total of $13,000 in 6 years' time, as opposed to $32,500 if you invested back in 2019 in Goldbacks. So the numbers, they just don't lie. And the results, to me, are very obvious and appealing. So when people bash the premiums on the Goldbacks, well, again, 10,000 back in 2019, not only did you make your premium back, but you gained more by investing in real money, the Goldbacks. Not so much with the US dollar. So guys, obviously for me, I like to have a little bit of everything, right? Because I cannot see or predict the future. And again, my feeling is we're going to see a huge correction in the market, the stock market, that is, right? So if that's the case, and if I'm right, then I am well protected and positioned to offset some of those potential losses in the future. Again, this is me. I do me. You do what's best for you. Do your own research. But insurance protection, or I should say wealth protection, is critical, guys, because we cannot predict the future. We cannot rely on the dollar, nor our government, to take care our national debt. It's just not going to happen anytime soon. But when we talk about protection, let's look at this way. If you own a home, you have home insurance. Home insurance. Why? Just in case anything happens to your house. You have a vehicle. You most likely have auto insurance. Why? Obviously, just in case anything happens to your vehicle. What else can we think about when it comes to insurance? Health insurance? Why do you need health insurance? Well, you never know, right? Health conditions may arise in the future. You do not know, nor can you predict these things. So this is where I think having Goldbacks and investing in gold and silver, investing in your future, take advantage of some of these services provided by Alpine Gold, right? Great IRA programs, gold lease programs that pay you interest in gold. And therefore, I think every family should have some sort of wealth protection in their lives. You just have to have a backup plan. The future is unknown. Global and economic uncertainties, you don't know what's going to happen. But if you have a backup plan, if you have some kind of wealth protection, including Goldbacks, physical gold, gold stocks, gold IRA, again, I'm not recommending anything, but think about your backup plan. What do you have for protection during economic uncertainties? Think about that, guys. If we are what economists believe, we are in a secular gold and silver bull market at today's exchange rate at $7.32 on the Goldback. What does that mean in 5 years' time? If we are in a secular gold and silver bull market, we could see the Goldback exchange rate well beyond $10. And I honestly believe it will happen. I mean, just look at the price difference between 2019 and today. That exchange rate has more than tripled. Guys, do your research. Have something in place. Have a backup plan. Be ready for that bull ride, because we are going to go through, again, what economists believe are decades of a secular gold and silver bull market. Guys, please don't forget to like, this video, share this video. I would greatly appreciate your support. Take care of your health, preserve your wealth. Most importantly, keep rocking, keep stacking. Thanks, guys.